Welcome to today's report, the 17th of January 2025, right? Okay, today I'd like to talk a bit about the CPI inflation report analysis, the January update so far, what we had. So first of all, what are the key highlights over here? The Bureau of Labor Statistics released its monthly consumer price index inflation report on Wednesday, offering valuable insights into the state of the economy. Now, the report revealed that headline inflation rose to 2.9%, up from 2.7% the previous month, while core inflation declined marginally to 3.2% from 3.3%. Basically, what we have here is a news that is one canceling the other. Okay? Okay. So although these figures reflect some stabilization, they remain well above the Federal Reserve target of 2%, signaling that progress towards inflation control has stalled so far. Because, like I said, one cancelled that. This showed that the year-on-year inflation rose by 0.2%, right? And since the last month, and this one dropped by 1%. But then again, this core inflation here, this is the one that the Fed is interested at. They look at this more than the headline inflation, because this takes away oil and food, which is energy and food, which is considered a bit more volatile than the rest. Okay, that's how core is measured. So because of this, one news canceling the other, we had some market reaction. And despite the less than ideal data, the stock market rallied and interest rates fell amidst mixed signal. Okay, so the question now beckons, why did the market rally? We did not really have very encouraging data, and why did the market rally? Now, this reaction was primarily driven by tempered expectations following last Friday's robust jobs report, which added 256,000 jobs, surpassing market forecasts. Now, investors feared that inflation would rise more sharply, akin to the labor market's unexpected strength, but the modest increase in headline inflation elevated some concern. Okay. Now, the December CPI report, paired with a relatively soft reading on wholesale prices early in the week, also suggests that while inflation is not cooling rapidly, it also shows no signs of re-accelerating. This nuanced inflation report may encourage the Federal Reserve, to maintain a dovish stance in its upcoming policy decisions. While it does not alter expectations of a pause in rate hikes at the January meeting, it could temper speculation about future rate increases. Okay, so if we're not talking about inflation coming up and all these kind of things, then forget about rate increasing. Increasing rates once again. This is something that the market feared in the past, right? So as a result, the market has found reassurance in the absence of drastic policy shift fueling the rally. This is what we think. I think the reason why we saw the rally in the market. Okay, but is the US stock market out of the woods? Means it's safe already, and you don't have any more worries, and you can start buying once again. So that we have to look at the persistent challenges and the path forward. However, the broader inflation landscape remains fraught with challenges. The US economy is currently facing a last mile problem. This I have highlighted, I think, many reports ago. When we talk about last mile here, where it's a situation where significant early progress in reducing inflation has slowed already, leaving persistent price pressures in key areas. So it's like from the beginning, it accelerates, the price inflation start dropping, and it drops at a very huge rate, right? But when it comes to where it matters, where you hope that it goes to the targeted area, in this case, the 2%, you're seeing that it becomes slower and tougher to get to that 2% point. And this is what we call the last mile problem. Okay. So categories such as gas, food, vehicles, and shelter continue to drive inflation, posing significant hurdles for policymakers, right? Additionally, broader political and economic uncertainties, including tariffs and labor markets constraint, add to inflationary concerns right over here. As such, in conclusion, while the CPI reports reflects a mixed picture of gradual improvement without a dramatic shift, it highlights the complexity of navigating the remaining journey towards price stability. Okay, so I would see this more like a situation where the market will react to any possible news that says that, probably it's not going to hike rates anymore. We're not going to hike rates, but we will probably consider looking into cutting rates further. Those kind of situations, you will see the market rising. Now, in the situations where the market will start dumping, the situations whereby is suddenly you see a huge improvement in the jobs data, and that is coupled by um, uh, numbers that suggest that inflation is slowly creeping up once again. Now, this kind of situations, this double combo will see the market dumping, okay? And it will become more sensitive when Donald Trump comes in, especially the first month, right? Because the market would like to see the first month, how these policies actually, to be frank, you will need the first and second month, but within the first month you would get an idea already. Okay. And once those numbers are coming in, uh those with those early data, that you can gauge whether inflation is going up, coming down, you would actually see in the price. When the price, the price action, when it moves, you leave telltale signs. What are the expectations, of the inflation, the direction of the inflation, where we will be heading? At during that point of time, we would have a better idea. And right now, uh, everything is just a guessing game. Okay, as such, I think it's better to just be a bit patient. If you're in what do you call, if you want to be buying, and I would actually not put in huge amounts until I have clearer data pointing towards a direction that and proving that the direction that we are looking at is true. In this situation, if you're looking into buying, you would actually need more data once Donald Trump is in office. And then, only then would you have a clearer idea. Okay. So just be a bit patient and we'll wait and see. Okay. So with that, that's the report for today.